Momentous day for the Indian banking sector. For India, actually, one really big bank comes into play. A 10,000 branch Bank of Baroda comes into being. But today morning, the markets will have a lot of other things on its head. It's going to have for the Asian markets on its head. Quite clearly, huge amount of green in Asian markets, largely because the data coming from China has been exceptional. Well, exceptional considering that for the last 3-4 months, the Asian economy has been showing contraction. If the PMI number comes in below 50, it means the economy has shrunk compared to the previous month. The PMI calculated by Caxin, which is a neutral body, an external body, showed it at 50.2, and the official China calculated PMI has come in at 50.5 compared to February's 3-year low of 49.2. So that's responsible for the Asian markets celebration, as it were, because all the supply chains are end in China, as it were. So if the Chinese economy does well, rest of ASEAN does well. Much of that green should rub off on India as well, though we are not part of the supply chain. It's very positive for us because it's generally an EM market upswing. India had a little bit of negative news, if you please. The fiscal deficit number that came for April-February was not very comforting. It was 34% higher than the full year estimates. Likewise, the current account deficit was not very good, but no one cares about that because the fourth quarter current account deficit is going to be excellent. We have got, a fairly decent export performance. So we shouldn't worry about that. Fiscal deficit may be a bit of a bother, but I think the markets won't care today. Morning, both of you.
Hi, Lata. Good morning. Hi, Anuj. Morning. Should I believe everything you said? I mean, it's All Fool's Day today. It's the 1st of April, right? So I'm going to be a bit guarded. But in any case, I mean, the Japanese markets are up, almost 500 points right now. So definitely that big surge is taking place in Asia. I'm just going to put together some cues that you have to watch out for this fortnight. To begin with, today you have the auto sales numbers that come out. Expectations are that numbers are going to be very weak across the board. So keep that in mind. A lot of it perhaps also factored in. Then you have the RBI policy on Thursday, where there is an expectation of a 25 basis points rate cut. So we'll keep that in mind. Come April 12th, you have both TCS and Infosys coming out with their numbers on the same day. So that's going to be the big cue on the market's mind over the next 2 weeks. And in terms of numbers, after many days of buying, FIs actually sold on Friday. There was a minor selling, but selling nevertheless, almost 90 odd crores of selling. So it's interesting the way we are poised in the market. Year to date, the Nifty has done a 7% jig, but the mid-caps are up only about 2 odd %. So which way will this go? Anuj, morning. 2 questions. One, are we all set to hit new highs, or will this market reach has this market reached an exhaustion phase? And 2, you were making this point last week that the mid-caps could now outperform the frontliner stocks. We haven't seen that so far. Do you expect the trend to change?
Morning, Sonia. But we did see that on Friday. We did see that on Friday. And I think on Friday, my focus is now on mid-caps and Nifty Junior because of 2 or 3 reasons. And look, on Friday, the Nifty Junior was up 1.5%. Mid-cap index was up 1%. And Nifty was up 0.5%. So, on Friday itself, the market gave you that indication that perhaps now the next leg. And I tell you something, stay away from the small caps because this is a market where liquidity is still chasing quality stocks. But the key theme about Friday's rally was the top gainers were the ones which were about 30 to 40% of their highs, and that perhaps could be the market's theme going forward. So even the Nifty Junior and mid cap index are still 10% of their highs. So there's a good chance that this gap now gets bridged. And for the Nifty, everything is looking so good. I hate it when things look so good. I think time to buy was, and we really were thumping our head at that point a month back when that Balakot strike happens. Sonia, remember I said that was the time to buy because that is going to change the equation. That is when the market is going to factor in the fact that Mr. Modi is going to come back and there's going to be a lot of liquidity. That was the time to buy. And now it's fashionable to buy every dip, but at some point the market could be vulnerable to a decline. May not happen today, but you're 100 points off, all-time high, and anecdotally, first test of all-time high normally sees resistance. So while this is still not a market in which you want to short because the screen is just telling you that it's just one way up, but risk-reward-wise, perhaps the beaten down good quality Nifty Junior mid-cap stocks, I think that's going to be the focus list. Also on the data front, while FI sold in cash market, there was some selling in index futures also after a long time. And since this rally has been driven by FII flows, you have to respect that. I mean, I would respect the minor bit of selling also and selling in index futures. So let us see for 2-3 days. So close to all-time highs, perhaps chasing index stocks may not be the best strategy, but mid caps, Nifty Junior, I think you have a lot of opportunities.
There's a
and you will see.
second leg of EM rally. You don't think that also rubs off?
Maybe it does, but see, the point is from risk-reward point of view. Remember, on Thursday we were making this point that today you want to buy next week's options, next week's call options, and in 2 days the Nifty has rallied about another 150 points from that point. So it just needs to perhaps catch its breath at some point. No, I mean, it may not give you that opportunity at all and just straight away go to all-time high. That may also happen. Things happen in market. I'm saying from the risk-reward point of view, if you have been long, there's absolutely no point for you to you just need to trail your stop. But if you've missed out on this entire rally, perhaps you need to wait for just a bit of cool-off. Otherwise, mid-caps and Nifty Junior, I think that's where a lot of money is over the next few days.
Okay, in fact, we will be discussing all this and more, but the